Let's talk about another firm favorite of the show, Bitcoin. We're going to check in on it because it is having a pretty measly time of it. Lowest level since September right now after an earlier swoon, extending its weeks-long decline from an all-time high of about, well, it's down 40% off that high now. Joining us with all the latest, she's always across it, Bloomberg, Katie Greifeld. And is there just no catalyst to take it higher at the moment, rather than there being any great need to sell? Or is it the fact that the Fed minutes have made us worry about Bitcoin too?
I think it's a combination of both, really, that there's no good news. I mean, if you think about what propelled it to that high in November, we had futures ETFs in the US for the first time ever. That was very exciting. And then now if you think about where we are now, you have really no positive catalyst meaningfully that we can see on the horizon. I mean, it's crypto, so anything can happen, but still nothing foreseeable right now. And then, like you said, we do have those Fed minutes that came out. You have a rate hike almost guaranteed in March right now if you look at what its swaps are pricing. And Bitcoin has really morphed into this macro asset. It tends to track tech stocks when it has really nothing else to follow, no other fundamental news to go off of. And that's really what has been weighing on it. I mean, by now it's in a bear market and then some, that 40% drawdown since those highs.
So do meme stocks getting involved in the market not present fundamental news?
It doesn't seem so. I mean, it did seem to, that Gamestop news registered as news for Gamestop, that news that they are getting into an NFT marketplace. That did boost the stock by quite a bit earlier, up as much as 22%. That's fading now. I think that's just, the stock has come so far, how much more can get priced in. But I mean, that headline actually makes sense for GameStop when you think about the fact that
AMC was already in it.
AMC was already in it. That was a little questionable. I mean, for GameStop, it is trying to push into this digital-first video game retailer to get into an NFT marketplace. NFT is obviously very hot in video games right now. If we talk about skins and the like, it makes a little bit of sense. It's pretty complementary to this push that Ryan Cohen already had underway.
So, Katie, a few weeks ago, I put about 60% of my portfolio into this Bitcoin ETF.
Oh no!
It's the new 60-40, I hear.
I was told that was the new 60-40.
Not from me.
60 Bitcoin, 40 NFT. I'm not doing too well right now. What's happening?
Yeah, no, I'm really sorry to hear that, Romaine, because that Bitcoin strategy ETF from ProShares, Bitto, as we covered very well on this program, within 2 days, it had accumulated over $1 billion in assets, one of the most successful launches ever. But if you look at data out from Bloomberg Intelligence, that enthusiasm faded pretty quickly. If you look at 2-month returns right now, it's actually one of the top 10 worst performing ETFs, down 30% since it launched. So it's been a pretty rough run. I'm really sorry to hear about your portfolio there.
Well, it's fine. It's fine. I'm putting the rest in ARK.
Okay.
He's buying the dip. And to that point, Katie, like what data can we look at to see as to whether or not the institutional money that we'd all been talking and hearing a lot about, people really starting to talk about this as a real diversification play, are potentially still doing that? You know, they're looking at this. They're potentially loading up when everyone else is buying out. I mean, how much of this is the retail selling out? How much is it institutional buyers?
In terms of Bitcoin specifically?
Yeah, and crypto more, because they're in Solana, they're in, you know, it's the DeFi world as well as what's happening in Bitcoin and Ethereum.
It's really hard to tell, and I think that when we do potentially get that rate hike in March and subsequent ones to follow, that will be a real test, especially of the institutional investors' mettle, because that was the story of 2021, this institutional embrace of crypto, starting to maybe finally accept that store of value argument. Now we're about to find out really if it was just a speculative bubble all along, that you actually will have the Fed tightening. It remains to be seen. I would imagine that the retail audience that is in Bitcoin, those are your hodlers. The institutions, it still remains to be seen.
And yeah, we had a few people come out and trying to stick to their guns this week of $100,000 on Bitcoin. And if that call sounds foolish, or if it's a longer term call, or if you're sticking to your guns, what do we know about the ever-changing price targets?
It sounds like we both spoke to Mike McGlone. Yeah, you do see those $100,000 price targets. They're still out there. And again, there are true believers who say that, listen, the central bank money printing, that they would call it, that you've seen over the past few years, that is inevitably going to lead to, you know, traditional currency devaluation. There just hasn't been enough time yet. But again, we're nearing a very interesting test for that thesis. We're going to find out how much conviction is behind some of those calls.
Well, how much conviction? And I mean, and in fairness, we've seen some of the more bullish folks to also, I guess, temper some of their comments, including Mike Novogratz and a few other folks have publicly kind of said that maybe, this is kind of a healthy pullback. But you bring up the whole issue of money printing, and I'm not necessarily sure I always bought the thesis behind that correlation that people tried to make, but let's just play devil's advocate here. If that was the case, and now you have a Fed basically making it clear that it wants to at least, slow down the money printing machine, if not completely turn it off here, then what's the case for Bitcoin after that?
That's a great question. It's one that I've been asking people. But when you do ask that question, pose it to crypto advocates, the answer they would give you is that they're not really taking the Fed at their word, that they expect the Fed to blink, that the money printer isn't ever going to really shut off. And I mean, if you look at the past 10 years, maybe there's a point there.